Aloha everyone, Joshua Hayes at bigwavetrading.com. We got a pretty good session on Wednesday. The Fed didn't do anything that surprised the market. Market participants basically were looking for the Fed to hold steady, not change the verbiage in their statement. All of that stayed true throughout the session, pre, during, and post FOMC. So all was well on that front. If you got to pull back, you want to do it the way that we did today. Lower volume, a little bit of a tail off the intraday lows in the SPY, the New York Stock Exchange, the Dow Jones Industrial Average. That's exactly how you want to pull back. The IWM, the rut. Look at that reversal intraday. Pretty weak at one point intraday. Big reversal, closing near the highs. Actually, I just now noticed I was not paying attention. The IWM actually closed higher than where it opened. Even better of a pullback session. This was about as good as it gets. And then on the flip side, the NASDAQ rallied and the NASDAQ 100 rallied, and it did so on above average volume. So pretty shocking to say, perfect session overall for the overall stock market, exactly how you want to see it act here at the 50-day moving average for the NASDAQ. And so far, the S&P 500 near the highs. Now I want to remind everyone, while I do have hedges on, I personally do not want the hedges to work. I would rather them fail. That way, the long positions that I have that constitute 70% of my overall portfolio in the Interactive Brokers account, that way they can keep on moving higher, making me more money, while the hedges just bounce me out for smaller losses. Now, the quicker the SPY wants to fail, the better, because theta is in those call options. But remember, once again, a close over those July highs, I'm out. And on a theta time decay, let's say SPY goes sideways for 50 straight days, well, eventually my automatic 50% sell loss per option rule that I've always kept will trigger. So right now on the books, I have two sell limits, one on half the contracts for a 100% gain and the other half at a 200% gain in case I'm away intraday and that happens to happen. On the flip side, I have one stop for all the shares for a 50% loss. But hopefully that doesn't happen. Hopefully if we decide to rally higher, we'll close above the July highs, we'll get out. Hopefully we can keep that well under 50%. But on that end, getting to the stops, market's good. You can see intraday, all of the limit orders filled, and FCN from yesterday hit my raised buy limit order. It was initially 77.03. The low of day the session before was 77.10. So 77.10 becomes the new limit, removing 10% of the position each day for 10 days until it fills. Well, it filled immediately on day 2, 30 minutes into the session. And as you can see with intraday stops, look at CSWI hitting 3 right out of the gate, then hitting another 2 intraday. Keeping me in. I still had one stop. I had 6 stops coming in today. 5 got hit. The final one goes below today's low day. But if you can remove CSWI, it was an extremely orderly day. You can review the stops. Once again, the winners took care of the losers. Rinse and repeat. That's how you want it to happen. Now, on an end-of-day basis, didn't have that many quality sell signals, and they're all pretty clear cut. The only difficult one kind of is MRNS. It's a 50%er, and I'll explain why. It's closing below the 50-day moving average and the signal date's low a day, but it's doing so on below average volume. It's doing so without closing below the previous session's low, which was a shakeout session. So overall, it's still holding. My initial first stop was right here. My final sell stop was all the way back here to that powerful up hammer day on the strong volume in green bop. Whenever it started to pull back and lost its green bop, it was doing so orderly, so I didn't consolidate all my stops to right here. In hindsight, maybe I should have, but now I'm kind of glad I didn't, because now I'm getting this kind of weird price action. So since it pulled back on lower volume the entire time, it did not trigger any end-of-day sell signals. But now with the close below the 50-day moving average, the signal date's low a day, that's an automatic 50%er. If volume would have been above average, that would have been a 100% sell signal, and yesterday's low day becomes the final stop. As it is, 50% of what I have left is right there, and the final 50% for now. Oh, I'm sorry. I canceled that half. So because we violated the low of the first, not the signal date's low, but the previous low of that signal date's base consolidation period, this becomes the final stop. So I'm so sorry, everyone. That's your final stop. That's my final stop. A move below 681, I will be all out of MR and S. Now for full sell signals today, pretty clear cut. QLYS, second close below the 50-day moving average in a row, closing below the recent lows on above average volume and increasing red bop. Confirmation close below the 50-day moving average, full sell signal, done and done. NSIT, horrible, ugly, intraday reversal, earnings loser, huge volume, red bop. That's the signal date. That's a 100% full sell signal, 3% loss. Home, confirmation close below the 50-day moving average on above average volume. I am incorrect by that. What I have here is basically, it is, but it isn't. It's a heavier volume, above average volume, closed below the 50-day moving average, but because home is closing below the 34.61 low a day of the 7-Eleven price bar at 34.57, it has now demonstrated it's in a complete rollover mode below the 50-day moving average and recent support levels, which that's it, because now from the ad signal, it's now a complete loss. The long signal was initially here, but that's a 100% full sell signal with that above average volume sell-off, with BOP increasing from the initial signal, something like a 9% gain, but overall for me it's like only a 3% gain. And then ELOX, 1, that's your first high, 2 lower highs, 3 lower highs. 1, there's your first lower low. 2, there's your second lower low. 3, that's your third lower low. That's a complete rollover below the 50-day moving average after setting a series of 3 lower highs and 3 lower lows. Full sell signal, leaving ELOX with a 3% loss. And then, of course, the stops that we just went over, the final full sell signal, CSWI, that's a complete failure. However, I had an emergency final sell stop that I knew would never come into play all the way here at 47.95. And I got to be honest, I didn't think any stop below this level right here would come into play, but this one did. And this one did not. So 4 of the 6 stops I thought would come into play with an earnings loss came into play, including an extra one, that one. But now the final sell stop is 5 cents below 48.45 on an end of day basis. You're selling it all. Now for new long signals, there's only one. HUYA. Let me change the tracking list so I can get rid of that white arrow. HUYA. This is pretty clear cut. This, I believe the earnings and sales growth are over 100% each quarter. So it is a future can slim quality stock. So keep that in mind. But HUYA only showed up in my IPO scan with the below average volume and lack of green bop for either 20 days or max green bop for 5 days. It then was not confirmed anywhere else. So HUYA is only 1% of my account capital. Limit order, high of the day, 34.83. First cut loss, a move below today's low, 32.51. Second one, a move below yesterday's low a day. God, get away, 31.65. Third cut loss on my end, 30.74. Final cut loss, 28.39. If you're new, if you decide to take this trade, I want you to only work with this stop level and that stop level, the 32.51 and the 31.65. Now, since we have time, I'll show you what I'm looking for. Hopefully, HUYA can pull that measured move off, 202% gain. But if not, then I'm at least looking for it to pull this measured move off, a 35% gain. And hopefully, if that happens, I can keep my risk to right around 7 to 8% if you use those 2 losses. So with that being said, we're looking at a potential reward to risk ratio using the 200% move of greater than 10 to 1. And then if we use this move right here, greater than 5 to 1. So we're either looking at 5 to 1 reward risk ratio or 10 to 1. And that's why I'm taking HUYA, but earnings are 8.13. So keep that in mind. If you take it, use those 2 stops, I'll be having 25% at the 4 levels I just gave you. All right, everyone, I will see you in the chat room bright and early Thursday morning. I actually wouldn't mind if we can't just stay about as quiet as we were today to end the rest of the week. It's been very, 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 very noisy earnings seasons. And just watching the way some of these stocks move during earnings season proves to me about the lack of accumulation on the upside in the overall market, just how really illiquid, as you can see, these stocks that I just run through really quick, how illiquid the market is whenever volatility does pick up. Yikesers. So keep all that in mind, everyone. Aloha.